in this industry, everything that has been substantial or meaningful or that moment in time always happens with little or no warning. It happens on a Monday morning, or it happens just like at the snap of a finger. It happens. How did it go from over here to over there, just like that? That's what this industry has a propensity to do. And perhaps it's because really, you're talking hundreds of millions of dollars, maybe a few billion. That's a lot of money, but not that much money if all of a sudden that kind of wealth throughout the system seeks refuge. It would blow up the entire physical supply, and it would happen. And I think it will happen because the mainstream public at some point has to take initiative on their own and responsibility and say to their money managers or say to their advisors, look, you've done a great job all these years, but this is real. I thought maybe we were out of the woods, but it's real. And when that money comes into the marketplace, Chris, honestly, it will be the defining characteristic. And I think it's something people need to pay attention to, because if you look one step above, in the last few months, 230 or 40 million ounces were taken off the London Metals Exchange in silver on exchange for physical. And when the big money continues to withdraw gold and silver from the exchanges, it will trickle down into the retail market like it always does. There's a little bit of a lag time there. And that lag time that we see right now, leading up to what could be chaos in a few weeks, should be a warning bell for everyone out there here listening to this, in terms of, if you're thinking of adding, don't wait for the price to fall any further. It may not. It may focus more on availability and what the biggest money in the world is doing. And their actions betray the price, betray the sentiment, betray the rhetoric. I think it really tells a story of where things are ultimately going. You and I together have spent more time researching silver than really any normal people would ever do. And maybe that's why it just seems so normal to us. It seems so obvious to us. And I guess it's that is part of it. I just am wondering, and this is where all of my theory and thought about product not being available readily comes from, is at what point does the mainstream realize that the road to retirement just may not be paved with stocks and bonds and mutual funds and real estate the way we once thought it was? Perhaps there are forks in the road that require traveling down the silver road or the gold road. Perhaps there is wisdom in reevaluating even the best laid plans, because we are entering that, I think, that zone, or we already have, where if you aren't really reevaluating things right now and you just are going on status quo, if you are not really thinking about being a contrarian right now, I think you have an equal of chance of doing well as you do being a victim. When you get to a level of great wealth, yeah, maybe luck was involved, but maybe not. Maybe there's a good deal of effort and hard work and stick-to-itiveness and intelligence and all of the things that go into where luck is opportunity meeting preparation. I mean, maybe these people who are successful in many ways in life will wake up and realize that, the things that have worked in an environment where since 1982 interest rates have traveled straight down at a 45-degree angle, making all of these traditional assets seem really better than they are because of interest rate suppression. At some point, they have to take a step back and say, my God, this is not the same environment where I became wealthy in. This is not the same environment I grew up in. This is an environment where I need to reevaluate my best laid plans. And I just keep thinking, when does that happen? And we've seen little by little an expansion, a reluctant expansion into the mainstream. But I mean, for goodness sake, at some point, people have to wake up and look at alternative investments. And like I said, if I had $50 million right now dropped on my table here, what would I do with it? And the funniest damn thing in the world is I'd put it into gold and silver. Did you ever think there would be a time where you are actually questioning the safety of U.S. treasuries or of the banks? And I think if you're not paying close enough attention. So where do you put your money in that environment? Do you think there's any coincidence that the central banks have bought more gold over the last 18 months than at any time in history? Or countries like India import 10 times, over 10 times the amount of silver is in the registered category right now. India imported in 1 year, or 230 or 40 million ounces in exchange for physical over the last 2 months, representing about 8 times. And it's interesting too, if you look at the LBMA, 95% or so of the zinc was taken off the exchange last year, 70% or so of the aluminum taken off last year. There are very smart, very sophisticated investors who are looking at the big picture, looking out way past their skis, and they're grabbing things that have real value. And I think this is something that if you're not looking at things this way, you're just looking at the price, you're being misdirected the way that these traders want you to be, by misdirecting price and throwing everyone off the scent. You mentioned a country like Saudi Arabia. Look, every one of the BRICS players, or the OPEC countries, are on the Belt Road Initiative. At what point does Saudi Arabia, who has now joined the Shanghai Cooperation Organization, which is the largest financial and military organization in the world, they're already signed a military agreement with Russia. They're in essence being protected by Russia and China and the rest of the BRICS countries to whom they've applied. At what point do they flip the switch and say, we're no longer taking dollars for oil? And what kind of ramifications does that have on a Monday morning? Again, there will be no warning and it will just happen. But when you get the president of Kenya, like we talked about before, not only selling his oil or buying oil from the UAE and Saudi Arabia in Kenyan shillings, but saying the market will be very different in a few weeks. You better sell your dollars. At some point, those kinds of things come true when you see more and more and more and more and more countries adopting this type of trade agreements away from the dollar. Until it happens, it is the way that it is. But I have a feeling, just by looking at all of these countries and all of the evidence pointing to these countries getting ready to do that, until it happens, it's status quo. After it happens, you're screwed if you haven't prepared. And that's how it's going to play out. And I think that's the way that these countries are playing it. I think when everyone is ready to do it, when all of the pieces are put into place in terms of agreements, in terms of how oil is sold, in terms of military agreements, in terms of aligning interests, they won't. And it's going to be, more of the same until, just like that, it changes. I really believe that is the game plan. And, Mike Adams calls it Operation Sandman, where over 150 countries have agreed at that moment to dump the dollar as the reserve. And what is the trigger? When does it happen? How does it happen? The only thing that I would venture to guess on is that it happens again on a Sunday night. You wake up Monday morning to a whole new reality. So to your point, it's valid until it's not. And I just think that we're heading towards the it's not